Good evening and welcome to tonight's webinar where we look at member-only content, ASX investment opportunities in review for the 4th of October. The advice provided this evening is general advice only. Investor Signals provides a broking account service which includes access to our model portfolios. The performance data will be updated towards the end of this week for the September quarter, but the table here captures the performance of all signals, so all buy signals for the ASX 100 and the US S&P 100, and tracks the 5-year average return, and we'll see the September quarter data or the first quarter of the new financial year updated in the next week or so. If you'd like to know more about the broking account service, please contact me on 1300 614 002. The services that we provide, access to the research, which is the technology that I'm presenting this evening, the broking account as just discussed, and the managed funds. So again, if you'd like to inquire about those, visit the website or contact me in the office. If you're joining us for the first time or part of your 30-day free trial, just a reminder, at the end of the subscription or the end of the trial, you can join as a member for $1,320 for the year. If you'd like some tuition on how to use the technology or set up your model portfolio alerts, give me a call when you're in front of the screen and I can spend some time with you walking through how to set those models up. Starting this evening with a look at what's recently been posted on the blog. So to do that, we click on the news button and just going through. So part of what we'll cover tonight is where the new opportunities in the market are, but I'll just highlight maybe one of the things that's starting to become apparent is the pullback in some of the healthcare stocks. We're seeing that reflected in the healthcare ETFs now starting to come up under buy signals. The IXJ is one consideration there. Brambles has corrected from just under $13 down around $10.50. I think that's starting to represent value, and you want to be having to think about adding that in a portfolio. CIMIC's one that been patient on. This is a longer term turnaround and recovery opportunity in the market. But it's interesting just that we're seeing some buying interest in what's been a relatively soft market over the last week or so. But CIMIC Group's had some buying interest, so just reminding you of that. Amcor has not yet switched from sell conditions into buy, so the present signal is the red box up the top, but the pattern feels to be setting up to me where we're likely to see an algorithm buy signal there. Amcor's relatively defensive. They are growing earnings, so it's one to have a think about when you see that switch to buy signals. Recent model changes, hopefully you've had a chance to review those. We've made some adjustments to the high conviction portfolios. Coal's correction from $19 down to $17 or a low there of around $16.50 is a buying opportunity, so we've been accumulating coals. Northern Star still our preferred gold exposure, and at $8.50 that's starting to look cheap, and we've seen it rally back up to around $9 or almost $9. Recent signals, Cochlear, as you know from prior recordings, I like that. As in Goodman Group, I do a little expensive, but taking advantage of that on this current pullback. Sonic Healthcare, again, we've added that into portfolios. A bunch of these ETFs. And I'll just jump back a little bit further, so just recapping what's gone on the blog in the last week. With the pullback in the market, we're seeing a broad increase in the number of stocks presenting buy signals. So some of these I've already covered. Interesting that we've had sell signals in Santos and Woodside Petroleum. So we're just starting now to have a think about whether we want to look at taking profit in those areas and reallocating that money into the likes of BHP or some of these healthcare names. And one of the themes in the market's been China's property, obviously the Evergrande issue. We're starting to see that possibly resolved with shares going into suspension today. Another large property group in China also going into suspension. So speculation is that there's going to be a forced sale of Evergrande, or at least part of their portfolio as part of the Chinese government cleaning up the implications of them carrying debt obligations that they're unable to meet. The IZZ's obviously been out of favour for a number of reasons, so this is the China market. So having to think about whether that's getting down to a level that's attractive from a long-term investment. I tend to think it is, but obviously always hard to pick the bottom when something's facing sort of such significant bad news flow, but a lot of that's obviously in the price. The iShares Asia 50, I still like that as a way of getting exposure to a recovery throughout Asia. The XJO Technical, we'll spend more time on that tonight. Bega, continue to like that. I think there's improving earnings story there. Amcor we've covered, Coles, and then we're back to last week's webinar. So with that, I'll start with a look at the top 50 the top 50 stocks. Just on the XJO index, you've got the S&P and the Nasdaq below the 10-day average. The XJO closed fractionally below that 10-day average. I've just given it the benefit of the doubt and put a support in there at 7,200. If the market reversed and closed below that, if we have a look at what's happening there on the Nasdaq and the S&P, the picture's a little more negative. There was a reversal in Friday's session. And for that reason, the buying that came up in the US market on Friday night has partly led to me sort of shuffling that support in under the XJO for the moment. But you can see that both the Nasdaq and the S&P are below the 10-day average, and you've got sort of a reasonable correction now that's underway from the highs. But will really has to be reassessed as to, after tonight's trading action, as to whether sort of this reversal that we had on Friday night's the beginning of sort of a stronger buy on the dip. You've got US earnings starting next week, which will be starting with the banking stocks. There has been a large number of earnings upgrades or analyst upgrades to S&P 500 stocks. So it'll be interesting to see whether the earnings can live up to that $50 of average earnings for the quarter that's required to support the current valuations. Tonight, what I wanted to do is just go back over the top 50 stocks, and in particular look at the stocks that are under buy conditions and the recent opportunities that you should be having to think about. So we get the percentage gains to the top, organising buy signal first. And Endeavour Group's been upgraded, so a number of analysts taking a slightly more bullish outlook on Endeavour Group. We've seen it rally from 650 up to 725. CBA, I've put support there at around $1 at the moment, but obviously if we were to see these indexes come under pressure, you really need to be thinking more about the banks as an overhead resistance. But for the moment, we've added BNKS, which is the global Banks Etf, and we'll reassess these positions as we get into next week's earnings. Stockland's under algorithm buy conditions, support there at around that $4.30 level. It's mostly been tracking sideways off that $4 support for the last for the last 12 months, but higher low there at around that 425. But we do hold Stocklands in the model portfolio. Lendlease again, interesting just to have a look at the rally that we've seen here from fairly oversold levels, but down at $10.30, now rallied back up towards $11. And I still maintain that it's one of the potential turnaround stories in the top sort of 50 stocks over the next 12 to 24 months, and there could be fairly substantial upside. The company's in a difficult operating environment at the moment, but the balance sheet's extremely low gearing. I think when I last looked at it, they're only running around 5% gearing. That may creep up a little bit with obviously the trading difficulties that the company's having at the moment. But certainly Lendlease is a long-term recovery. Aristocrat Leisure's in the model portfolio doing well. Northern Star, buying that at a deep discount to the last buy signal on it, but at around $8.50 to $9, I still think it's a good value gold play. Keep in mind that their costs are running at around 1,500, almost 1,600 an ounce. Gold price only at 1,750, so we do need to see a strengthening of that gold price, maybe back over 1,800 to really see buying interest build in these gold names. ANZ, so an alternative to owning too many banks in the portfolio, just as a reminder, is the MVB, which is the Australian Banks ETF. If you want international exposure, again, as a reminder, the BNKS is the offshore or the global banking equivalent of the MVB. So ANZ under buy signals, Westpac's under buy signals. Mirvac is under buy. Our preference, as I've discussed numerous times, is rather than holding too many of these individual REITs, the SLF is an ETF to consider to replacing the REITs, but Mirvac is in our top 50 model and it is performing well after switching from sell conditions into buy conditions there at around $2. The top 50 model is the more popular broking account that we manage. So if you're interested in having your portfolio match our top 50 model, you can open a broking account and I look after that aspect of it. GPT under buy signals so just backtracking there, GPT switched from sell conditions into buy conditions around that $4.25 level, now pushing up towards $5. South 32 under buy signal, it continues to do well. And I think there's room for having some exposure now across the major miners in the portfolio. NAB under buy conditions at the moment, so we've added small exposure there. Insurance Australia Group's a new switch from sell conditions into buy conditions, and we've just started adding that into the top 50 portfolio. Tabcorp's under buy conditions, and you'll find that in the model portfolio. Horizon, again, this is a new addition to the portfolio. It switched from sell conditions into buy. Support there at around $3.65, and we've added that into the model. Macquarie extended a fair way from the last buy signal, so I was under buy conditions around 150, now pushing 180. I think Macquarie's probably bumping up near resistance where it is at the moment and more likely to track sideways after pay in the model and under buy conditions. Goodman Group, so property trust corrected from $24 roughly down to $21. Still expensive, but their growth is attractive. And if you don't own it, I think adding sort of half a position size where it is at the moment, I'd be very surprised if we saw a sell-off in Goodman that was, anything below $18. So you could simply take half a position here and add to it if we were to see a dip a little bit lower. And the only reason I think we'd see that slightly lower move is if interest rates or inflation concerns picked up in the US and we saw a spike in that bond yield. But the underlying business there is very sound, so buyer on the dip there. Cochlear, buy on the dip here at around this $220 levels of buying opportunity. It's one of the better performing stocks in the model portfolio. Wesfarmers, the correction from 66 down to 55. Start thinking about accumulating this if you don't already hold it. Obviously, the trading conditions are disrupted at the moment, but in all likelihood, 3 to 6 months out, we see that starting to recover again. Woolworths, the correction from 42 down to 38, I think is a buying opportunity. The last actual algorithm buy signal we had on it was at much lower levels at $34, but I think this correction lower is an opportunity to add Woolworths. Coles is probably maybe a little bit better value than Woolworths. Sydney Airports, we hold that in the model portfolio, and obviously that's doing well. Treasury Wines, I've shuffled a tighter support line up there at around 11.50. I don't think we'll see Treasury Wine trade back below that support line. The management are doing a good job of essentially redistributing the sales channels opportunities and with less reliance on China, so we're seeing a rebuilding there of revenues, and from what I read, that strategy's been well executed, so happy to continue to hold Treasury and be a buyer of that on the dip. BHP, down here, I think if you don't hold it, now's the time to start adding it into your portfolio. Just a reminder, if you don't want too much resource exposure as an alternative, our preference is certainly BHP, but an alternative is OZR, which is the resource ETF. So BHP a buy down here at the moment. Rio, again, room to add some exposure there. Coles, the correction from 19 down to 17, we like that. Brambles, as I mentioned earlier when we summarise what's gone on the blog, the correction here from 1270 down to 1050, start accumulating a position in Brambles. Sonic Healthcare, you start thinking about this. On a deeper sell-off, you could see it back at around 37, but I don't think you'd see it much below that. So between 37 and $40 is the accumulation range there for Sonic. Computer Share performing well, one of the better performing stocks in the model portfolio, as is Fortescue. Whether you need to be owning Fortescue, Rio, BHP, Mineral Resources, or maybe just BHP and that OZR ETF, but we're still willing to step into the market and acquire some exposure into these iron ore names at the moment. ResMed correcting lower, and I had been suggesting that the recent rally up was maybe starting to put ResMed on too higher PE ratio. I think we're seeing this pullback develop, and it's likely to continue over the coming weeks and months. But ultimately, the business is still in good shape, and the next algorithm buy signal here in ResMed, if you don't own it, I think that would be an opportunity to add it. So I'll continue to draw your attention to that when we see the next signal occur. Likewise with Xero, I like this business. It's not cheap. The concern is, as is the case with all technology stocks at the moment, is that if the US bond yields rise, then these technology stocks continue to come under pressure. But I think Xero is a high quality business, and if you don't own it, thinking about adding some exposure to the portfolio makes sense. And now what's happened is we've finished moving through the stocks that are under buy conditions. We're looking at stocks that are now under sell conditions. I'll just skip through these and we'll just highlight a couple. So Origin we quite like as a counter trend trade. Transurban, I think now that the equity raising's completed, I think although there's not a lot of growth in Transurban in the short term, I think it's likely to probably grind a little bit higher. Scentre Group not doing there at the moment. Qantas not doing there. Likely to see Qantas switch to buy signals in the next sell-off, so we'll keep an eye on that for probably over the next 2 to 3 months. Santos under sell conditions now, as is Suncorp. Woodside Petroleum, we haven't removed that yet from portfolios, but it is under sell conditions. APA Group, possibly getting down to a level where the value's starting to look attractive there for APA. Not doing there in QBE at the moment. Newcrest preference Northern Star over Newcrest. James Hardie, we saw that little sell-off. I was starting to suggest it's getting a little expensive up where it is, and that's really just a slight softening in some of the housing data trends. Keep an eye, though, on James Hardie and the next algorithm buy signal, and I'll draw your attention to that on the blog or via the recording. ASX, still attractive and a reasonable income contributor to portfolio, so you may want to think about continuing to hold ASX. Medibank, we'll wait for that to pull back and a switch to buy conditions. Telstra, still think that that's reasonably attractive as an income play. Amcor, the correction from 18 down to 16 is attractive. Ramsay Healthcare really bumping along sideways, but a good income contributor for portfolios. CSL, be patient here, wait for a more significant pullback and think about adding that into portfolios, but just a reminder that we're starting to see buy signals pop up in some of these healthcare ETFs. So the iShares healthcare is one to take a look at, and I'll draw your attention to that on the blog tomorrow. But CSL, to give that some room to head a little bit lower. Just to revisit these model portfolios, and I'll finish on this tonight, so just in case you haven't had a chance to keep up to date with these, so I'll just skim through what's been added recently. So in the top 20 model, we've had Brambles, NAB, Coles, Rio, ANZ, all added sort of in the last 60 days. Make sure that envelope's green for the portfolios you want to receive notifications about the change. If we have a look at what's happened in the top 50 model, Sonic Healthcare, so I think that's right. Fundamentally, there's support there. The range I mentioned tonight was between $37 and $39. So Brambles at around $10.50. I think that's fine to add. The banks, you can either add those or think about the MVB. Ryzen, we touched on that as a new addition. Obviously, the sell-off in the miners have been a little bit deeper than we originally thought, especially in the case of Rio and BHP. So yeah, just familiarise yourself. So this is the most popular portfolio that we manage money for in our broking account and among subscribers. So you probably just want to make sure that that envelope's on green and you're getting notified of any changes to this model portfolio. Looking at the top 100, and again just getting the least number of days to the top. Next DC, I've always been a bit cautious on the company's growth and accounting standards, but we'll start to take a closer look at that. The analysts are upgrading the earnings and saying the company's going to achieve the earnings guidance that's been provided. Reliance Worldwide's now under buy conditions. Some of these we've already covered. Reese is an interesting one, just if you're looking to broaden your portfolio. Still exposure to sort of the housing area predominantly. Mineral resources. So there's a few names there that have been added to the top 100 model portfolio. And the ETF, I'll just look at the iShares and the all ETFs. So in the list, and you'll find it set up this way in the watch list. So under the watch list, you've got all ETF. So if you want to look at the performance of every ETF on the ASX, and then you've got it broken up into the individual product providers, so the likes of iShares, which is their most popular one. What I want to do now is go into the model portfolio and have a look out of all the ETFs listed on the ASX, which ones are in the current holdings or under algorithm buy signals. So you see a couple of new additions here. And as I mentioned, there's the healthcare. So you've got the Van Eck Vector Global Health Leaders, but you've also got the iShares Global Healthcare. So that's one to start to have a think about as we're seeing this correction lower in these healthcare names. Other stocks that have been added, the Magellan Global ETFs that have been added there, you can see just across the last week we've had a few new additions to the portfolio. The iShares portfolio is popular, so as a combination, investing in the ASX top 50 model and then complementing the international side by using the iShares ETF portfolio is generally the more popular strategy that we run for clients in the broking accounts. So if you're wanting to have a look at the iShares and what's in that portfolio, there's been a couple of new additions here, but you can obviously click on the symbol there and toggle through the charts and just familiarise yourself with the ETFs that are in that model. If you'd like to know more about the broking service, please give me a call, and happy